Morning, Steve here in Chicago with the morning grain comments. Well, it's Tuesday. We got a lot of data that we have to kind of work our way through, and we also have the Pro Farmer Tour that's out and about in looking at crop conditions. As far as the overnight prices, beans are about unchanged. Corn's down 1 or 2 cents, and wheat's down about 7 or 8 cents. For the second day in a row, wheat's down because of talk within the cash markets that Russia's going to be an aggressive seller of export wheat until they run out. And some people think that by January, their numbers will be less attractive and they won't have as much wheat to export. But that's a long time for funds to be long between now and January when Russia is offering wheat lower than U.S. prices. So the wheat market needs to see, with funds record long, some export data to help support higher prices. As far as the corn is concerned, Pro Farmer in South Dakota, they found a yield of 178. Last year, the yield was 148 for corn. USDA is using 170. In Ohio, they found a yield almost at 180. Last year was 165, and USDA is using 180. So again, these numbers support the USDA's 178 corn yield. All their pod counts were also higher than last year and average for those two states, but those two states last year had some dry conditions. So again, the soybean yield is being made now, and these rains that have moved across the Midwest may be helping that crop. Overnight, the USDA said that the corn crop was rated 68% good to excellent versus 70 last week and 62 last year. So that really didn't support overnight corn prices, but it shows the crop is coming down. And when you talk to merchandisers like in Minnesota, North Dakota, even central Illinois, the crop is not as good as it was a couple of weeks ago. Soybeans rated 65% good to excellent versus 66 last week and 60 a year ago. And here again, the soybean crop is being made right now. Winter wheat harvest is almost done. Spring wheat is rated 74% good to excellent versus 75 last week and 34 last year. And again, farmers in the harvest are finding spring wheat not quite as good as what they had thought. That might be due to some dry weather in July and the quick maturation of the crop. Yesterday, export sales, wheat's running 38 behind a year ago. USDA is estimating a 14% increase, so that's one of the reasons wheat prices are down. Corn is unchanged. USDA is expecting a 5% increase, while beans are 3% behind, and USDA is actually suggesting a 3% drop. Funds yesterday, sellers of meal, corn, and wheat bought a little bit of soybean oil, and I think that in general, it's kind of the wrong time of the year for the grain markets to rally going into the harvest. We are hearing basis levels are strong in corn, wheat, and beans, probably reflective of the demand better for corn exports than bean exports right now. And we expect that farmers will try to store as much corn and sell as much beans going through harvest. But if they have to pay bills, they will sell corn. So this offers some resistance to the marketplace until after harvest. As always, these are my thoughts and not those of ADM Investor Services. Have a safe and profitable trading day.